Hey, here we go. Sorry, guys. All right, where's the deal? Where's the deal? So last night, looking at the activity, and this is me coming out of meetings all day, kind of bummed out, because I didn't get to sit in front of my monitors. Where's the deal is the first thing that came to my mind. Headline risk return is the second thing we're going to talk about today. Trading a few headline names in the news. One of them is Plug Power. You're getting an opportunity today because they're issuing new stock. They're cashing in on their high price by selling some stocks, some shares into the market. Brings the price down this morning. If you haven't gotten into plug play, you're going to be able to do it a little cheaper this morning. And then we're going to jump into Free Flow Wednesday. So market slumped into the close last night as no news of a fiscal stimulus deal had made its way through Congress. You right now have Congress still sitting around saying, we're not going to do this, we're not going to do that. And it's resulting in a gridlock for the fiscal stimulus package. Obviously, the president stepped up over the weekend and said he's going to make some executive orders that are going to move things along, and those immediately started to run into a challenge. So we are in a gridlock right now that's causing a little bit of motion in terms of the market. What's going on with the market? If you look at silver and gold yesterday, big pullbacks in the metals. I told you a week ago, maybe even 2 weeks ago, wait for the pullback in silver and gold before you get into those trades. Night traders, we've got a trade, an open position out there for a miner right now. Let's not talk about the name. We don't want to give up all of our secrets here, but we came within 5 cents of getting that filled yesterday. You're going to get an adjustment on that order this morning because I want that company in the portfolio. The headlines quickly turned positive when the president announced a deal with Moderna last night to produce 100 million doses of their experimental vaccine. So we talk about, and I don't believe it either, Kevin, Russia came out yesterday. I thought it was ironic, the timing of this, because Russia came out and said, not only do we have a vaccine, but Putin's daughter has been taking it, and she's free and clear to go. This is one of those situations where it almost turns into a bravado, a little bit to hubris, I guess would be the word that you could pull out here. So that headline, though, last night, pop Moderna, about 7-8%, a lot less than what we've seen here in the past couple of weeks here. When Moderna comes out with some sort of positive news, we get a 20% pop. In this particular case, we only got a 7% pop. Maybe it has something to do with Kodak, and I'm literally just throwing it out there. But the fact that Kodak went through the roof and then came right back down, and that was also part of one of those deals that the president had put together. Obviously, that is now on hold, but maybe it's that the headlines right now that are coming from these announcements from the president aren't carrying as much weight as they used to. Anyhow, 100 million doses of Moderna's experimental vaccine are going to be developed here. So that is a good thing. Of course, what happens there? All aboard. The cruise line and airline stocks start to jump on that news today. Watch that jump. It's not tradable yet. As much as you want to hear me say, go and buy these stocks. And some of you are going to want me to say the same thing about the financials, and it's just not going to happen. We're seeing a sector rotation here over the last couple of days that's favoring the financials and moving them up towards their 200-day moving average. But they're not turning into trades. They're simply making moves right now. Big difference between a fast aggressive in the right direction and a move. We're still seeing more of that sector rotation that's pushing the S&P 500 to new highs because the financials are finally getting up there. The industrials are finally getting some of that money that's been going to the large cap technology. Think of this as something that is almost like you've got 4 kids or 5 kids, let's say, and you've got $5 you can hand out, and you've got to give it out. For the last 2 months, the market has been giving all $5 to one of those kids, large cap tech. Now, all of a sudden, there's some sort of distribution of that. That child's got too much of the money in the pocket. It's going to come over to the other 4 children. That's exactly what's happening here with the market. You're evening things out. People are looking for quote unquote value. Value is not going to be a lasting play in this market. This is a trader's market, not a value investor's market. That is something important to remember over the next couple of months. We are not in the midst of a value-driven market. A value-driven market would indicate that the economy has hit its absolute bottom, and we just don't have the signs there, even though we're seeing GDP this morning going up. We've got inflation numbers, CPI numbers going up double of what their expectations were, 0.6% versus 0.3%. There's signs that things are heating up here, but we're not all the way out. So watch your butts on this one. The sector rotation is going to pull money from some of those large cap names, and we've seen it happen even on some of our positions in the night trader. But at the same time, that is going to reverse quickly as soon as the trade opens back up and gets out of those oversold technical areas on technology. Let's look at a couple of charts here real quickly. The S&P 500 finally rang that bell, that overbought bell yesterday as we went above that 33.50 level and started to have what we hope to have, a little bit of a close, a second close above that level, inching into that new high territory. Now all of a sudden we have those headlines that come out in the afternoon that say not going to be a deal. Boom, everything falls out. 325 is where you find your first line of support from the trader's trend line, the 20-day moving average. But right now, the trades are going to be at the sector levels. I got to see what people are laughing about here. Russia vaccine is, oh man, a shot of Clorox. Not nice, Peter. Not nice. Or maybe it's a shot of Mrs. Meyer's cleaning solution here. Anyhow, 325 is your first line of support on the S&P 500. We're not going to come close to that today. We're going to pop right up in the new high territory on the S&P 500 with these headlines that are pushing stocks higher. So let's look at the our next chart. As always, the VIX. VIX has been effortlessly gliding lower here. And now we see a pop in that volatility that brought us right back up. It went up 9% yesterday. 9% to the 25 level, and that is that level that, again, I tell you is going to remain in play and eventually break as we see August volatility start to build up even more. We are looking at September in terms of our volatility play. There's a reason for that. I pointed out from the very beginning. I did not expect to see a nice orderly drop in volatility here, but usually after those nice orderly drops, you see a disorderly rise. So in this particular case, we look at the VIX 25. It's going to come back down lower again this morning. We'll see where it ends up for the day, though. I don't want to see a break below 20. Don't think we have to wait to see it. I don't think it's going to happen with the S&P 500 reaching up to overbought territory. It is a situation where the VIX is destined to start moving higher. Destined. Plug power. Plug power. Notice I didn't say plug pay. I usually say plug play because I like to play the stock down 9.4%. Shares going to open up at 10.25, and that's because they made an offering of 30 million shares plus of common stock at 10.25 last night after the close. Folks, this is one of those opportunities that if you did not, first of all, if you weren't in it before earnings when it shot from $9 to $12, a 33% return. And if you put your stop loss in, your trailing stop loss at 3%, you got stopped out yesterday at 11.50. So this is the opportunity to put that limit order in at 10.25 this morning and hope that you get executed right out of the gate. As the stock is going to pull back because they're making that offering at 10.25. So we know shares are going to execute at 10.25. The stock is going to come back. This is them capitalizing on the high or the run in the stock over the last 3 months. They're trying to take their treasury shares and get more money in their coffers so they can go out and do more businesses. And business in their case is going out and acquiring other companies, and that has worked well for Plug Power. Plug Power pulls back to 10.25. I think it looks good as a buy at that point. As a trade, you ride it back up to $12. You put that trailing stop loss in, and you let it go from there. The financials. This is the same slide we had last week. And give me just a minute because I'm going to go through the questions that are in there already. You know what? Load up that Q&A area too, guys. I'm going to hit the Q&A real quickly here in just about 2 minutes because I'm almost done with my charts. I want to talk about your charts today. Anyhow, The financial sector is still a group to avoid. Sure, the last couple of days, maybe 3 or 4, we've seen some activity in the financials. Look at that. The XLF went from 24 up to 25.5 in just 3 days. Look at what's right there, the 200-day moving average, and it's getting close to being overbought. Don't fall for this bait, folks. Interest rates haven't changed. The economy hasn't changed. Nothing about the financials have changed over the last 3 or 4 days. The only thing that's changed is that there are traders that are taking profits from the large cap tech stocks. That's why when we look at the QQQ, which I'll pull up right here, we see the Qqq dropping over the last 4 days, something it's not used to doing. We don't see the Nasdaq 100 drop. Why would you see the Nasdaq 100 drop? It's Tesla. It's Netflix. It's, why in the world, outside of American Airlines being in the Nasdaq 100 and outside of, some of these other companies that are holding it back, if you will, why would you see the Nasdaq 100 drop? There's one reason only. It's because people are taking profits. People are taking profits and they're putting it somewhere else that they consider a value for the meantime. Right now, that's financials for the last couple of days. It's going to reverse back. You're going to see that money migrate right back into the Nasdaq 100. We've got the chart coming up finally. I've been doing a good job of stalling it here. You're going to see that money come right back up. Notice it's trading on its 20-day moving average or the trader's trend line here. Look for some support to start kicking in, at least in the form of a consolidation for the Nasdaq 100. So I think that is right now the financial, what we've seen, this run of the financials has probably run its course. If we go through and start looking at some of the banks, we are not going to see the activity that we want to see as traders. We're going to see the type of activity that you look at as somebody who would think about getting in and then no. I'm going to get out of this because it's just going to reverse again. Let's go look at a couple more. Moderna, obviously, I brought this up. The company is up 11.6% after reaching a $1.5 billion deal with the government. We've already talked about this. The stock's going to open up a little over $75 below its 20-day moving average. Not the kind of bump that we've seen from Moderna right now. If you bought it and you bought it at $70, this is one where I start to think, all right, if it jumps up to $80, you've got, in that case, a 13% return. If you got in at $70, 13% return is tight enough for me to put a trailing stop on it. I don't think it makes a run to 90 on this one, guys. I think this is a easy trade to say, put a tight leash on it and don't let it get away. Don't let it go. Just like REO Speedwagon used to say, don't let her go. So that is it. We're going straight to Free Flow Friday. I'm going to go into, and this is because I wasn't with you guys Monday and I won't be with you Thursday or Friday. So let's jump in to the Q&A section right now. See if we've got some people that have listened. And 11. Here we go. So let's jump right in. You know what, Dan? Great question on Lordstown Motor with the SPAC acquisition, Diamond Peak Holdings. It's announced, and you guys know I like Workhorse, WKHS, as one of those companies. There are 3 different EV companies that are looking to actually do some production at the Lordstown plant, and that is one of them at Lordstown Motors. What do I think of it? I think it's going to be a great, I really do think this will be a great use of the SPAC. When you can buy that listed when it's coming out, I think it's a great, again, those that don't know what a SPAC is, this is a way that private equity can come in and basically buy something that they're going to turn public very quickly. And it's been being used quite often right now. And I'm simplifying it when I say it that way. I think the Lordstown plan is a great example of it in work and working well, because now you've got 3 different EV companies that are looking to actually do production. So they'll be able to increase production in a plant that was once dead. I like the way that it's working there. Do I think Camping World gets back above 35 before September? Got slammed really hard and bought the dip way too early. I do. I think that you're seeing, let's go to the chart for Camping World Holdings. Camping World Holdings, obviously, has been one of mine for the last, 4 months, 5 months or so. We've been talking about this stock and how it's going to outperform the rest of the market. It's done exactly that. And now that we're seeing football being canceled and everything else right now, you got to look at it from the perspective of people are still going to go to companies like Brunswick, Camping World Holdings, the outdoor companies. It's holding that 32 very well. Haven't done a test on it yet. I'll probably do a test on it this afternoon, just to test, like I did XPO, what happens when we see these declines after an earnings announcement. Normally, that's a very good indicator of what we're going to see as we look forward. The 20-day moving average has to be taken out, which is at $36. I like the fact that the volume is still very light here at this point. Tells me that we don't have sellers piling in to take profits. I mean, if you look at it, you had people that got in at $7 and now the stock traded up to 44 bucks. It was kind of I don't want to say a slam dunk that they could see some profit selling, but certainly some profit selling, or some profit taking rather, was in the cards here. $32 setting a nice strong foundation. I like it. It looks almost like what we saw in July, and then we got a launch off of that. Watch for the next couple days for Camping World Holdings to start ascending, break through that 36 level, and that takes it back, yes, above, up to 40. I do think that we get above 35 before September, though, to answer that question. Should we keep our VIX position in the portfolio? Absolutely. That move yesterday to 25, and it was at the close. Granted, it was late in the afternoon. And we're going to open at 22.40 right now if you take the print that's here. So we're going to cut it back in half between 20 and 25. We're going to be at 22.40 or so. The VIX right now is getting to that area where it's kind of like pushing a beach ball under the water. And the harder you push it down, at some point, the farther it's going to fly when it breaks the water and comes back up. The reason I say that is look at this, how we're kind of bouncing down on that 20 level. And frankly, we were doing the same thing at 25. And that's where I was waiting for it to go through. I was waiting for it to pop. And you remember me telling you, I'm watching this 25. I just want to see that challenge of the 50-day. And when we got it, we got into the position. And now we've got another little bit of a flat line here because things have gone down in terms of volatility. So 20 becomes that number, and you've got that beach ball effect that starts to push us up higher. When it does go, it's going to go big. So yes, we keep the VIX in the portfolio. Let's look at a few eyes. FireEye. I like FireEye. FireEye and some of the other cybersecurity, and they do a lot of, FireEye does a lot of different business lines here. Sorry that the charts aren't keeping up with me. I did have 2 espressos this morning, so love the break on the news, the earnings above the 200-day moving average. $15 is going to look to set out as a base. FireEye has not been as volatile as many of the other technology stocks out there. When you look at it, $15 where I start to play. Don't want to see it break down too much. Notice we're coming off an overbought reading from that break above 16. So it's kind of leveling the stock out, trying to set up for the next run higher. I think you see somewhat of a sawtooth sideways activity. This is that EKG type of activity that I see. Doesn't offer a lot for the traders. You're getting squeezed here between the 200 and the 50-day. And whenever that happens, it turns into a squeeze play, and it's going to break one way. This time it broke up. So you've got some upward movement that's going to happen. The 50 days bullish, the 20 days bullish. I think you see shares of FireEye that are going to remain in a bullish trend here for the next month or two. Let's take a look. Miners have been here we go, Peter. Peter coming in with a good question on the miners. Miners have been heading lower. Gold as also. Silver and gold yesterday. Not going to do my Cornelius impression right now, but silver and gold taking a hit. You've got Barrick Gold that got pulled back to its 50-day moving average. Let's look at GLD as well, because you'll see that the GLD pulled back as well. There's some profit taking. Last week I said we need to wait for profit taking to get into the gold trade again. This is that time. 175 on GLD, maybe you get lucky and you can grab it there. 180 is, I think, the spot where a lot of people, including myself, should be looking at GLD as a trade in terms of adding it to a portfolio as a foundational piece. There's your picture of silver. The same thing. We've got profit taking that comes in and takes it out. $23 is the price that you look for. It fills this up, brings it back to where we gapped up higher. And what's going to happen now is you're not going to see as much of a volatile run, except when we do see some of that fiscal stimulus, because part of the reason that gold and silver came down is because of the gridlock on fiscal stimulus, right? This is only going to go back up as soon as we start to see that stimulus come into the picture again. I think you see a more steady, it won't be as parabolic. It'll be something more like this, which is still parabolic. I have a target of it that takes it back up to $28 and like it at 23. When you look at the miners, obviously Barrick Gold, GOLD is the miner that I look at. The volatility's been there because the volatility's been in the yellow metal as well. I think these are names that you can pick up right now and expect to see a rebound because people are not going to stop buying gold and silver stocks right now. They're going to continue. They're just taking profits on the first little itty bitty sign that we were going to see some weakness. You know what? Stocks options for January 20 coming out. Is that the time to play? Oh, look at this. ZB with the big one. Stock options for 2022 and September 2022 are coming out. Is there a time and a place to jump in that far out? I always have to slow myself down for Zach's questions. So yes and no. This goes back to the question we had last week about a stock substitute. If you're looking for a stock substitute for, I'll use Procter & Gamble again. For Procter & Gamble, the first question that I want to ask myself is, do I want to own it? If I'm buying the stock, do I see my future in Procter & Gamble in September of 2022? Quite frankly, I can't answer that question in the affirmative. That is one that I say, no, I can't. You can have money managers and will have money managers that will use those longer dated leaps for their portfolios as stock substitutes because they know they are buy and hold investors for the next 5 years. And that is another use for those. I have a friend that actually works with stock options for Procter & Gamble employees as they're getting ready to retire. And they use those long-term dated leaps, both puts and calls, to actually help to hedge the portfolio of the stock that they retire with when they leave Procter & Gamble. That is a very effective use of those long-term options because a person who's leaving Procter & Gamble can only sell in certain increments as they're getting rid of that. I mean, they can sell the entire thing, but typically they're selling certain increments of Procter & Gamble. When you own a hedge against that, you protect it, and they're relatively cheap except for the time value when you go out of the money. So yes, there is, Zach, for reasons of investing. There are for reasons of trading. No, they're not. I mean, you can normally it's going to be a hedge in somebody engineering portfolios that are going to be using those. Tesla's going to split 5-1. They learned from Apple, right? And I don't get this. Somebody answer this for me. Somebody riddle me this. I'll throw it out to ZB now. I'll ask you guys a question. You can buy partial shares of Tesla. You can buy partial shares of Apple. You can buy partial shares of almost anything, Amazon, etc. So if we think about that, do we really need to split stocks anymore? And I'm all for a stock split because I think a stock split brings it back down to a psychologically acceptable level, the price of the stock, not a price point, because you can buy these partial shares. You can go on to your Robinhood and buy a partial share of Apple, right? So $100 in Apple is $100 in Apple, regardless. It's a fractional share. You're not losing any money. You're getting the same value out of that. So in the case of Tesla coming down and splitting their stock, they're going to give you 4 shares for every one that you own. You end up with 5. In this particular case, I think it's good from a psychological perspective because people hear about a $1,500 stock and they don't want to buy it, even though they can. And we know that if you look at what happened with Apple, Apple announced that they were going to do their split and the stock got a nice little bump out of it. It is the stock split bump, but it often happens. It generates, and I think you guys should know this, if it generates 0 extra capital, it doesn't generate any extra money. It generates buzz that makes the stock go up. And when it gets split, the price is the same. You own the same number of shares. The value of your stock is the same after the split. So it is a psychological aspect of the market pricing call it the marketing people being in charge, which is never a bad thing, I don't think, when the marketing people have a good have an idea like this. DocuSign or Square? Square. I like Square better right now. Square or PayPal? I got to stick with Square still. That's a hard one though. PayPal's been doing so very well, and we talked about PayPal ahead of earnings too. You know what? I've got to split the difference on those and say I take both PayPal or Square. I like that PayPal's come back down to its 20-day moving average, giving you a little bit of a trade here that could run right back up to 200. Square, we see the numbers here as the chart will come up, has been a little more hanging, if you will, hanging Chad. I'm not sure what to call it, but almost down to the 20-day. You're going to see a lot of these stocks that come down to the 20-day after their earnings announcement, after they gap with their earnings, and give you an opportunity to get back into it. This is a market that is selling the news, and we're not even seeing a lot of buying the rumor, because I think a lot of people were buying the rumor months ago. Etsy starting to roll over here as well. 120 is the price I'm looking at on Etsy. If you can grab it at 110, that's even better right now. AYX would be another one that is being asked about, and I'm just looking at the chart on this and kind of doing chart reads for you guys here. Obviously nothing that I'm giving as recommendation or bonus trades. I'm gonna have some bonus trades for the night trader people later today. Alteryx break below the 200-day moving average. Let me look at the monthly here on this, because my spidey senses tell me that we're down below the 20-month as well, and we just cracked below it. Watch throughout the rest of August trading on this. We want to end up with a print that's 115 or higher on AYX, simply because that keeps it out of bear market territory. And you can see that it's been able to get some support from the 20-month here over the last year. Like the stock from that perspective. Don't like it if we start to see it really roll over. Something outside of a 1 or 2 week correction is going to start to see a little more trending. I'd have to look at the volume trends here as well, and it looks like it's just a couple of days. So watch that one closely around the 115. That's the mark you watch where it goes into a bear market. Casinos up on MGM buy-in. Time to get back into them. They're also up because of the Moderna news. Moderna coming out. Everybody's got vaccine fever. Maybe Ted Nugent will write a song about this, vaccine fever. But if you look at it from the perspective of what's going on, and we've got the casino here downtown that is open, and I see very little activity going into that. That's a Hard Rock. Property now. You see very, very little activity going into it. We already saw MGM get crowded when we saw Vegas reopening, and everybody started to jump into it, run into it really, and then we saw reality kick back in. I think that you still need to wait until we get a better handle on what's going to happen in the fall. You know what? If NCAA conferences are canceling their football season right now, first of all, think of the business that's going to take away from MGM right away. Their sporting books make huge money. So right now, everybody's looking at the NFL to kind of save things for a lot of these casino books here. I'd watch MGM over the next couple of days. The 200-day moving average, a little bit of resistance for the stock as well. And you're overbought. Look at it to pull back below 20 bucks here, simply because it's overbought and you've got a 200-day moving average in the way. Headlines have come back. They're not giving as much of a boost. I think that's what we learned today. That's what the headline from us is. You know, headlines are back, but they're not back in full force. That's the market's open headline today. ENPH, N5. Take a sip of my espresso here. I don't know why I say N5. I know it's N phase. 20-day moving average is where you move in on this stock. It's $65 or just below $65. This is a trader stock, sawtooth rally, 75 to 65 on a pullback. You jump back. maybe you break and you get down to $60 or so, but really around $63 to $65 is where you're going to see the traders start to pick in after it came off this overbought reading. You can see the same thing happen here. We got a little more of a decline, actually made it down into oversold territory and a break below the 50-day moving average. I don't think we see the same activity here because this is being traded more heavily right now. Watch phase to probably try to shore up some support around 65. That is also where you had your top from July as well on end phase. And I'm clicking back over to the chat to see what you guys have been saying about me. Fastly, I saw as I was clicking away, FSLY. Proper disclosure, I am an owner of Fastly. Have purchased it here within the last week. I believe I mentioned to everybody that I was looking to buy Fastly on a pullback, and you certainly got that. Pulled that back down to $90, slashed through the trader's trend line, now sitting at the 50-day. Fastly set to open a little higher today. 50-day is what I'm looking for to hold on Fastly. Fastly's story has been TikTok. Everybody's worried about TikTok, and it's 11% of their business right now. Are they going to be able to fill that void as quickly as they need to? And I think the answer is going to be yes, because they've been stuffing people into this business. People have been jumping on board with Fastly. That's why you've got a stock that has been doing what it's been doing. Watch that 50-day moving average right now. Volume starting to come in. If that 50-day holds, 75 is a nice buy. This is going to be a little bit of a longer term. You're going to have to wait for this to get back up to 110, even 120. It's not going to be a parabolic or even a 45-degree like this. We're going to see something like this on this time because it's going to crawl higher. People are going to be worried about TikTok. So at this point, I think you look at TikTok as at Fastly as one of those stocks that is going to give you, a run, and it's going to definitely outperform the rest of the market. I don't think that it's going to give you a run straight up to $100 right out of the gate here. Right out of the gate. It's one of those situations where this is going to be a little bit of a slow bleed higher. Let's look. Yes, Summer Rensto did die this morning. Melly, buy the dip. Is on Mercado Libre. Mercado Libre is definitely a buy the dip stock. 20-day moving average right now. We've seen this happen before. Not from as far away as the 20-day moving average was, but this stock definitely likes its 20-day. That is for sure. At $1,100, too bad that they're not going to be splitting this. At $1,100, obviously you're going to be looking at the options on it, I would think, and probably spreading it out between the 11 and the 13s, or maybe the 12s and the 13s is where I start to look. That's for sure. That's where my eye goes immediately, the 12, 13s, and maybe a month or two out. Mercado Libre obviously going to make a move up there pretty quickly as well. Let's look at any ideas on Nugent Ross? Thank God somebody picked up on that. I was on the other area with the vaccine fever. Tesla can still go down. Mike, not likely to go down much. Okay, we're answering others' questions, which I like. I enjoy. Fractions is because you can afford a split. Yep. Look. Need 100 shares for covered calls. Yep. Nugget. You want to look at Nugget? NUGT. That would be your alternative to the GLD. You know what, guys? I like the miners. Obviously, I keep sticking by my follow gold for the trend. And this, by the way, is not a trend. Hold on a second. This is not a trend. What you're seeing with the GLD is a pullback today, and it still won't come off the direction, the miners. And that is a leveraged. I do like the leveraged move on that. This is not a trend. This is just a pullback. This is a one-day pullback. This is an opportunity, or it's the beginning of a trend change. But one day does not make a trend. This right now looks to me as a buying opportunity. So whether it's in the minors or in the actual GLD, it's an opportunity to grab it for 8% less than where it was trading the day before. If you would have bought it, the question I always ask people, if you would have bought it on Monday, why wouldn't you buy it today when it's 9% cheaper? The same thing could be said for silver trading down at $23.33. You can buy it today cheaper than what you would have bought it on Monday. And if you wanted to buy it on Monday, then you should be buying today. It's just that simple. Nothing else has changed except for the fact that we've got a little bit of a cluster situation in the fiscal stimulus area. When this gets cleared out and checks start getting printed again, silver and gold are going to start going up. The dollar is going to start going down again. That's as easy as it gets. And that's a great place to stop because it's 9:30 right now. My time is up with you. So guys, I'm not to be here tomorrow or Thursday, but I'm putting together a list, especially for my night trader people, putting together a list of some short covering stocks that I want you to look at tomorrow. I'm going to send it to you. Trader people, you're going to receive that from me, and they're going to be some bonus trades for you. These are just flat out gimmies. Here's what I've got for you. The short interest data got updated. I want to get it in your hands. I think there's some good trades here, especially since we're seeing some stocks still continue to press higher with a lot of short interest growing. So I'm going to give you a little bit of those bonus trades. I won't be able to be with you. Hopefully that'll keep you happy until Friday and then Monday eventually. And we'll be getting back together then. All right. I hope everybody enjoys their day. I wish you all the best trading success. And I'll see my night trader people at 11 o'clock. All right. Have a great day, folks. Bye-bye.